Steve Peterson here with Infinity Investments, and welcome to our channel. We talk all things commercial and investment real estate. And in today's video, we're going to be talking about when do you know it's time to sell your property. All right, it's January 2023. And interestingly enough, this month I've seen, at least in my business and I've seen in my local area, an increase in inventory properties being, coming on the market for sale. A lot of people saying, hey, is it the best time to sell, so on and so forth. So there's three things I think that you should take into account and when you're evaluating if this is going to be a time for you to sell or not. Irregardless of the marketplace, it could be a good time for you to sell, right? Maybe in the market, it's not the most robust time compared to like a 2021, but there is time in a relatively down market when a sale makes sense for you, okay? And I got three times when they do. The first one, it's when you are burnt out on a particular property. When your physical and mental energy is at a zero on a property. I'm in Oakland, California, in the Bay Area. A lot of the tenant landlord situation is real stressful right now on a lot of different fronts. And especially if you either as a landlord, you have some tenants that you just cannot connect with. You got some tenants that's professional tenants, you know what I mean? They know every trick in the book. They know every loophole. And they're not honoring the property, right? So, as many horrible tenants as there are out there, there's a lot of good tenants too. And if you got some good quality tenants, you might want to hang on to them, right? But for a lot of the buildings out here, it's a problem, right? And it becomes draining on you. Or if you've had a property for 30, 40 years and you are ready to ride off into the sunset, from being maybe a landlord of apartment buildings. And you're like, look, I need to do something easier. It's time for me to retire. I need to kick my feet up, right? When you're burnt out, or maybe you have some health stuff, or maybe you hit that point. This ain't got nothing to do with the market. This is you being burnt out. Because what happens when you get to that point, number one, the performance of the building, it's not going to perform at its best, bottom line. No matter if you got great tenants or if you don't, you're not going to be able to run it to its full potential, right? And you're not getting any more enjoyment out of it. You know what I mean? It's not fun anymore. This business actually can be fun and can be exciting, can be very rewarding, right? When it gets to the point when it's not, now we need to start looking for alternatives, because there might be a property out there that you can acquire in a tax-deferred manner where it invigorates you, it excites you, gets the juices back rolling. You know what I mean? And there is this idea, a lot of people say, hey, look, I buy a property, I want to own it indefinitely, hand it off to my kids, which makes sense. But you don't have to be stuck to that particular property. So if you're in a property and that one right there is just bothering you, you got something, whether it's a tenant, it's a reoccurring issue, a roof, of the neighborhood, whatever it is, then look at what can you do if you were to sell. Because you might take a little bit of a lower number today, but if you bought another property that gave you a better quality of life, and guess what? Being that the market is down, you may not get the best price. However, you can buy in a down market. You can really win when you buy. And maybe you can buy a property that it gets you excited about the real estate business once again. Now, that's the first reason when it's time to sell. Second reason, when you know it's time to sell, is when you have a diminishing return on your equity. And you have a return on your equity that is not sufficient. When I mean return on your equity, the amount of money you make every year based on the equity that you have in the property. This is not the return on investment. Return on investment is when you put up money to acquire a property, you get rate of return on that money, right? That's return on investment. Now, you put this down payment, you acquire a property, that cash hopefully grows into much more amounts of equity. Right? So many people in the Bay Area right now are making between 1% and 3% on their equity, if that. In fact, if you're making 3% on your equity, you're probably doing good, right? Most people, they've seen their cash quadruple or grow significantly in value. And now the equity, the money that they're getting on their equity is low. So let's just say, for instance, you got $1 million and you're getting 1% on that. So that's $10,000, right? A year in cash flow, which say you put $100,000 down to buy that property, well, you're making 10% on your money, but you're only making 1% on your equity, right? Wherein in this marketplace, you could easily go out and buy something where you're going to make 5% on your cash. And let me just tell you, the good thing about interest rates going up and the market softening is you can buy properties where you can generate a higher return. But let's just say all you did is get 5%. So you sold a property, did a 1031, you took your $1 million in equity, and then you got 5% on it, right? And maybe you sold an apartment, but fourplex, and you went and you bought a single tenant triple net property, like a Dollar General, let's just say. And now you're getting 5% of your money. You went from making 10 grand a year positive cash flow on your $1 million to now you're making 50 grand a year. And you can do that in a down market, right? All day long. If all you got was 3% on your equity, which is now cash, now you're getting 3% cash on cash, you tripled up your income. You got a significant, you're making 30,000 when you was making 10,000. And if you went, let's say, from multifamily to single tenant, or you went from a tough multifamily to a nice multifamily, you're making more money, you're dealing with less headaches, and you did it in a tax advantage way. Okay, that's when it makes sense for you to sell in a time like now, because you're not making enough money on your equity to justify you dealing with all the crap that sometimes comes along with dealing with buildings, man. It's just what it is, right? In the market, when the market's good and it's rolling, sometimes hey, look, my property's going up, 200 grand a year. I'll deal with whatever. When it stops doing that, and then the issues could, if they are allowed to fester, right, pop up. And what I see with bigger investors, institutional investors who've done well, is they're looking at their portfolios and say, hey, look, what are the ones that are not performing the most? Let's see if we can sell those and go into the market with some cash and have some fun and buy something that we think can outperform what we got, right? That's important, and I think, and I'm seeing that now in January 2023, and I think we're going to see more of that. And this is not like 2008 where the market just fell off a cliff and there is no liquidity and there is no money in the market. What's happening now is that we have interest rates that are higher, but there's a whole bunch of money out there in the market. They're just, look, the challenge is finding a property that's going to yield you a high enough return that return is going to be higher than the interest rate. That is important. All right. But it can be done. We're doing it. We're seeing it done. We're going to be doing it. And if you are thinking about, hey, should I sell? And you hit a point where you're getting a diminishing return on your equity, it just might be time to sell. Now, third and final reason, when you know it's time to sell, we talked about, being burnt out on the property. We talked about, return on equity diminishing. But here's the real reason when you figure out it's time to sell a property, investment property. When you found a better asset. So let's just say you find a great property out there. There are starting to be some great deals. We're starting to see some distress. We're starting to see some price reduction. What that means for the buyer is there's a good deal. There's this weird thing that I've seen in the markets. I've been in the game since 2003. It's like when the market's at the peak, everybody wants to buy. Except for those who are very shrewd. They're a little bit cautious when everything's at the peak, right? But everybody wants to buy. I remember in 2021, we were closing deals. People was closing deals without getting appraisals. Cash deals without getting inspections. Just here we go, cash, just close. Doesn't seem to make sense, but that's what people was doing at the peak. Now, when things shift a little bit and prices come down, which is a good time to buy, a lot of people, I don't know. The interest rates are high, the economy, I don't know. Meanwhile, the sophisticated, experienced investors are ready to go on a buying spree. And so if you're one of those people, or you're an aspiring sophisticated investor, and you could so happen to locate a really nice looking property, but you don't necessarily have all the cash to buy it. Or maybe you do have the cash, but you say, hey, here's a really nice property. Now I got a property that I'm not so happy with. Maybe I'm burnt out on it, or maybe my return on equity is not the best. And you can say, hey, if I were to sell this property over here, I can buy this property over here. And you might be able to negotiate a longer escrow because the market's a little bit softer these days. Which means you can negotiate, and you might be able to negotiate a little bit longer of an escrow, and then give yourself time to sell your property, do a tax deferred exchange, and wouldn't you know it, now you're making more money. You're either dealing with less stress, or you're dealing with more enjoyment because you bought a property that you like, that you feel good about, that you feel excited about. And now that's how you thrive in a market like we're in. Just keep in mind, most people's fortunes are made or established in the downturns. Now it's time to get active. And even if you're not buying, you need to be a student of what's going on. And if you're not selling, if you say, look, I'm just gonna hold on, which could be a really good thing, by the way, if you got quality assets, still you need to be a student of what's going on. So I hope this helps. If it does, like, share, subscribe, and to the next video. Peace.